What's up, everybody? This is Chris Craddock, your real estate coach, and I am here today to chat with you about a question I'm asked all the time. Should I buy real estate now? Should I get into real estate now? Or is the bubble about to burst? Should I wait until it bursts and then jump in at the bottom of the market? Listen up, and we're going to hit these points. Let's go. First of all, if you're looking for a long-term play, it's always a good time to buy real estate. If you're trying to time the market, that's not the way to do it. One, a mentor to me, Gary Keller, said this: the difference between the geniuses and the idiots are how long you hold the real estate. So if you hold a property long enough, even if you bought at the top of the market, you are going to be so happy you bought. Let's look at where we are right now and ask ourselves, are we at the top of the market? Because that is a question that everybody is asking. Are we at the top of the market? We saw last year that we saw double-digit improvements in price, right? Some people say it's about 15%, others say up to 23%. It depends on where you are in the country that it went up. So literally, if you have a property that was worth $100,000, it's now worth $115,000 to $123,000. If you had a property that's worth $500,000, it went up over $100,000 minimum last year. It's crazy. So let's look at what is happening now to see, can we still sustain upward price move? The market's going up, and here are the reasons why we can expect a strong market in the future. First of all, here's what happened last year. Last year, the government printed literally 30% of all the dollars in circulation right now were printed in the last 12 months. So when you look at that, what happens is it creates inflation. And when inflation happens, everybody runs to hard assets. And so everybody that has real estate, the values went way up, and people that don't, their values, what they have, go way down. So what happened was, when the government tried to help, what it did was make the rich richer and the poor poorer, and that's what happens with inflation. So with that said, all the hedge funds, all the people with big bank accounts from Wall Street to just all over the country were buying hard assets, gold, silver, cryptocurrency, and real estate. And since so many people were buying real estate, it was putting an upward pressure on the market. And here's why. Think about it like this. Inflation, what it does to real estate is, if you have a payment, let's just say you have a $2,000 a month payment, right? That payment is like that for the next 30 years. Well, if there's more dollars in circulation, it means that it costs more to do everything. The prices of gas goes up, the price of food goes up. We're already seeing it right now. But the reality is your mortgage payment stays the exact same for 30 years. So you just got a massive discount on your property. So that is why why real estate is a hedge against inflation. If there's inflation, you buy more real estate. And it looks like we're going to be headed to more inflation. So we want to continue to buy more real estate. Up until 2008, for decades, builders were building an average of 5 million properties a year. 5 million properties a year were coming on the market. After 2008, for a number of reasons. One, a lot of builders went out of business. Two, a lot of banks were less likely to lend to builders. Three, builders were kind of having PTSD after losing so much money. Builders started building so much slower. And so what we've seen since 2008 is that instead of 5 million new houses hitting the country every year, we saw 1 million new houses hitting the country every year. So only 20% of what had been being built for decades to keep up with the need, the desire for properties had been being built. Well, when you see that happen, right, price is always a function of supply and demand. So if there's less available, I just went to a football game at FedEx Field yesterday, and they charged me $5 for a bottle of water. $5. Why? Because the supply is limited, so they can charge more, right? A beer, I think, was $15. It's crazy. So all of that was there, and they can raise the prices because there's less supply. Well, that's what happens with properties, right? There's less available, so the prices go up. Well, builders are trying to catch up now, but they're so far behind for all of those different reasons. So it, again, is keeping supply limited, which is pressing prices up. The next reason we are in a strong real estate market and we can expect strong returns for the next number of years is because of the interest rates. Interest rates are so low. They're artificially low. The government's keeping them low so people can buy properties. People are able to get in that were never able to get in before because of different loan programs that the government has, and also because the interest rates are so low. We're seeing a lot of people that buy their new house, and in the past, historically, if somebody bought a new house, they always sold their old house. Well, the reality is, because money is so cheap, we're seeing massive amounts of people hold on to the property that they were living in when they buy new properties as a rental and as an investment property. And so when you're seeing people keep those investment properties, again, it means less properties are hitting the market for sale, and those are out there for rent. So as that is happening, what you are seeing is an upward pressure because, again, less is available, so it's pushing the prices up. So all those said, those are the reasons: inflation, less built, less people selling. All of those are reasons why we are looking at a strong real estate market, and we don't have to worry about the bubble being ready to burst. Everybody just thinks, oh, we can't sustain these prices. Here's the last pitch to you. My grandfather, right after World War II, in Arlington, Virginia, right out, if you Google it, you'll see it, right outside of DC, bought his property for $8,000. $8,000. And he said, his quote was, "The market can't sustain these prices. The bubble's gonna burst. People cannot afford properties for $8,000. I'll tell you what, that house right now will sell for over $1 million. So let me tell you, just the idea that the bubble's gonna burst just because we emotionally feel like it will is a bad place to guess, right? You look at the trend of real estate through the decades, through the centuries, it's always been up, down, up, but it's always trending up. And you know why? They're not making more dirt, right? We have a finite amount of real estate available. Real estate is one of the best places we can invest. So get out there, buy real estate, trust that the market's still strong for the next few years. Go out, live uncommon. Bam!